In today's video, we're going to go over 2 trades that I took. As you see, we are also going to go over the results for the past 6 trading weeks. This is from May 1st. Euro AUD was the first one, all the way until my most recent GBP JPY trade, which netted over 16K. So I have the results right here on my MetaTrader. Okay, let me put the month, as you see right there. Month, you see every single trade there aligns perfectly with the trades you see here, with the trades you see on the screen. And I'm also going to do a withdrawal right after this so you guys can update and just see that, like, you know, first of all, this is a real live capital, and second of all, how much you can withdraw after being up about 22K. Yeah, so 22,595, same amount as we see here. I'll probably just withdraw between 8 to 10K. I don't want to withdraw more than half, just so I have that buffer and I keep increasing my capital and I just continue to compound the results. So only a couple of things to look here. First of all, profit factor 2. Ideally, it's above a 2, so not the best there. But my risk to reward should also be higher than this. So those are some of the things that I'm looking at when I'm analyzing my statistics. How can I increase my risk to reward? How can I increase my trading win rate? But we're making money, so we're going good. That's all that really matters. At the end of the day, if you make money at the end of the month, you're performing all right. So we have 2 trades here. Now this one right here, Euro AUD, is this loss right here. I closed out the 16th, and I'm going to explain right here how it is that I took it, why I took it, basically how you can avoid making the same mistake I did. So the first obvious mistake, which I don't realize how I didn't notice this first, was that we had already been way too bullish for a very long time before I started to look for buys. So I was kind of annoyed that I wasn't able to catch any of this massive movement to the upside. So I started to look for buys off of this pullback. So I noticed that price came up to 1.78,825. And I told myself, okay, once we get this pullback, I'm going to enter in, go long, and set my take profit at this high. And actually on Friday, I set a buy limit, but I missed my buy limit. It didn't get activated by, not a lot of movement, by a couple of pips. Price actually flew up, came all the way back down, activated me on Monday, but because I was still confident on the setup, I left it running, and that was probably one of the biggest mistakes, because immediately after going in some very small profit, the market dropped down massively and hit my stop loss right away. So it was pretty annoying when that happened. Of course, it's part of the game and it's normal that it's going to happen, but it was a very simple mistake that could have been avoided by just simply deciding that on Friday, once the market moved and made this whole move up without me, I decided to not stay in the opportunity and actually cancel my buy limit. That's something I could have done a lot better. The market then broke this area of support, which by the way also happens to be held as a 4-hour area of support, retested it, and continue to go down bearish. Now I am starting to do some new type of analysis here slightly. So I just wanted to share that with you guys. One of the things that I'm doing is that I'm marking the start of the weeks. So I'm just marking, look, for example, start of month. And then if I go down on a time frame, let's say for example, the 2-hour, it'll say start of a week. And you can see that down here. Don't get this super confused. It's not some type of crazy strategy. It's just more of a visual reference for me, where like, okay, this is the start of the week. Where have we gone so far this week? And if I'm analyzing a market on a higher time frame basis, like a daily time frame, where has the market gone since the start of the month? And that's exactly what this serves right here. Like that's the purpose of this. And that's what I'm able to see, like, okay, we're bullish. We have this support. That's what made me want to take the buys. But remember, the main mistake was entering in way too late on these buys. The point of the matter is I missed the buys, So missing the buys, missing the entire move of the market, you have to just accept it and basically not try to chase, which is exactly what I did, entering in on this pullback, expecting the market to continue up when it's already gone up all of this price movement. And it's very simple. I actually would have ended up in a winning position if I would have gotten activated on Friday on this buy limit. But because I wasn't, I stayed in because I just wanted to take this trade. I wanted to catch this move. That was the very simple mistake. So lost about my full risk there, which was 8K. Now, however, on GBP JPY, I made sure to not make the same mistake. Everyone was looking for buys on GJ, and I was only looking for sells. This was so confusing to a lot of people because it was a bullish market. Yes, it was. However, the market shifted structure to the downside. Once again, daily time frame analysis, have the start of the month here. Where have we been going? Bullish. But I learned my lesson from Euro AUD. I was not going to make that same mistake again. You go down into the 4-hour time frame. Once again, you still have the start of the month. We were bullish. Obviously we had some buys earlier. The point of the matter is that the market had been too bullish. It had gone up too much and it had started to form lower highs and lower lows. And that was the first indication to me that we were going to go bearish. This is what it looks like on the 1-hour time frame. I marked here the lower highs and down here the lower lows. That's what those circular drawings are. And essentially, if you go down into the 30-minute time frame, you see even more detail. What do you see right here? If I take off all of these drawings, the market went bullish. We were bullish for a very long time. You can even draw like a trend line here just to show how bullish we are. And then it's essentially a trend line break to the downside, break of support, retest the 4-hour area of support. So right here, we're rejected off of the 50 EMA now that I changed the settings. So this is the 50 EMA, rejected off of it and rejected off of a 4-hour area of support and resistance. Why is it an area of support and resistance? Because you have a rejection here, multiple rejections here. And then it came down, broke it, retested. That's where we caught the sells. And we caught this entire impulsive move with the matter of like 3 hours. It was such a fast move. Happened very, very quick. My initial take profit was actually lower. It was down in this area of support for about 130 pips. I closed that a bit sooner just due to the fact that I was already happy with my profits and it was such a quick move that I wanted to secure those profits. This is a textbook trade, and this is basically what I mean every single time I'm talking about ride the wave. This is what I mean. Yes, this was a bullish market, but the shift of structure was so obvious and it happened right here. And it made it very clear that the market was going to stop forming higher lows and higher highs. It's very simple. So once you have evidence that the market is going to go down, even if the market has been bullish, as long as you have your entry confirmations intact, you can enter in sells. What was my entry confirmation on this trade? Easy. The market closed below support with an engulfing candlestick. A closure below support with a shift of structure, and it's a major area of support with a trend line break, is a very, very clean entry confirmation. So I just simply set a sell limit. Price came up, retested resistance one more time, rejected off of the EMA, got me activated into the trade and melted down. As we started to break below the low of this candle right here, this bullish little support that we had formed, that is when I moved my stop loss to break even. So I moved my stop loss to break even upon breaking this low. And at that point, good to go down all the way. Both trades this week, 1 loss, 1 win, and yet I made more than double on GBP JPY as I did when I lost on Euro AUD. That shows the power of risk to reward. As you see, the results speak for themselves. I mean, you can see here, if we just go through this one by one, made 7,000, lost 6,000. This is kind of like a break-even trade. So let's just not pay attention to this. So made 7K, lost 6K, made 15,000, lost 8,000. This was a smaller trade, only 5K. Then lost 8,000 again and made 16,000 again. So notice the size of the winners are just massive while the size of the losses are kept very, very moderate. So that's going to be it for today's video. If you're interested in learning more about my trading strategy more in depth, then go ahead and watch this video on the screen right here. Just because this video right here only went over the trades, it didn't actually explain the strategy. So if you want to go over the strategy, you want to learn in depth more about ride the wave strategy, make sure to watch the videos that pop up on the screen right now. Leave a comment with what you want to see next, and I'll see you in the next one.